to Leaders of Tomorrow, India's only daily television platform for small businesses. Over the past 7 years, we've understood what matters most to you, the entrepreneur. And in year 8, we're taking head-on two of your most pressing concerns, that of funding and mentoring. I'm Sunanda Jayasseelan. On the show tonight, a very special, exclusive conversation with two experts who don't need much introduction. First up, our absolute privilege here at the Leaders of Tomorrow to welcome the Chief Economic Advisor, Krishnamurthy Subramanian. We also have Dr. Arvind Panagariya. He is Professor Economics, SIPA at Columbia University. He's also the former Vice Chairman of the Niti Aayog. We've broken this very special conversation up into two parts. In part one tonight, we're talking to them about revival and what it's going to take to put India Inc. back on its feet, part of a larger, very special initiative that we're doing here at the Times Network called the India Revival Mission. What's it going to take to put businesses back on their feet, even as we're looking at policy changes? Listening to what these experts had to say. Mr. Panagariya, my first question to you, and it's such a pleasure having you here on the Leaders of Tomorrow, talking directly to entrepreneurs, talking directly to India Inc. About what you feel is really going to be, the recovery period as far as India Inc., as far as small businesses are concerned. We here at the Times Network are talking about the India Revival Mission. What's it going to take to put India Inc. back on its feet? My question to you is really the implications of the pandemic as far as GDP growth is concerned. What would you like to say through this interview to anyone watching about what is going to be the impact, what is going to be the implications?
Well, look, the situation is a bit uncertain. So trying to put any numbers is a difficult thing. I think it's almost foolish to try to put some numbers on this. Much is going to depend on how we recover from COVID itself. My personal view has been that, if we recover against COVID, the economic recovery can then proceed pretty well. In the interim, I think the government will need to make sure that any unwanted bankruptcies don't happen. And that is ensuring that the cash flow remains, meaning that firms that are viable are not allowed to go bankrupt on for reasons of liquidity.
Sure, fair enough. You raised some very important points. I do want to talk about liquidity. I do want to talk about bankruptcies and liquidations, perhaps anything that India Inc. Could be staring at in the next couple of months. Before I come to that, though, I want to talk about the fact that what started as a humanitarian crisis has very, very quickly spiraled into what could possibly become also an economic pandemic, an economic crisis. If that's something that India Inc. needs to work against, whether it's the government, whether it's entrepreneurs, what do you think is the need of the hour? How can that be prevented? What should small businesses, particularly which are watching this interview, put in place quickly as they're staring at an uncertain future?
See, the difficulty in India is that there are lots and lots of these very tiny enterprises. They are not largely a part of the financial sector or the formal financial sector. And the only kind of formal sector effort was through mudra loans. But those are very small loans. Since 2015, after the mudra scheme was launched, you have had, the loans that have been given per loan amount has been something like $49,000 rupees. So it's either small amounts. So there, I think, the enterprises which are largely self-employment enterprises. These are enterprises that don't employ any workers on a regular basis as hired workers. They will need to, access their usual informal sources of finance the ones on which they traditionally depend on. For the government, it's going to be pretty hard. What the government can do for the self-employed is, through social spending, meaning that, free access to food, some small cash transfers that the government is capable of doing. So I think the reach to those enterprises which are largely self-employment enterprises, we call them the own account enterprises in India, would be through the social programs. Now, for the enterprises which are sort of medium or a bit small but closer to medium size and larger, which are part of the financial sector, I think that's where the central bank has a very important role to play. What seems to be happening is that the central bank has provided, meaning the Reserve Bank of India has provided enough liquidity, but the banks are hesitating to lend. So I think some sort of credit insurance, at least for a short period of time, will probably be required by the government, meaning that the government has to undertake to insure these loans, at least for the interim period during which enterprises are still coming out of the corona crisis, and the country, of course, is also coming out of the corona crisis, so that they can banks can begin to loan.
Mr. Subramanian, I want to start by talking really about the implications that we're seeing of COVID-19. I do know that any sort of future sort of crystal ball gazing is not going to be easy because the situation is unfolding as we speak. But if you can talk about the implications that we're seeing perhaps of the pandemic on the GDP, sitting where you are as the CA, what would you like to tell entrepreneurs who are watching this interview about what perhaps is going to be the implication as you see it for this fiscal?
So, Sunanda, first of all, thanks for inviting me. As you rightly said, there is significant uncertainty, for most of us. These are times that we are facing for the first time. But it's still useful to use a proxy for an episode that was similar, and that can inform us about what might be what might be in store for us in this year. I'm going to use the Spanish flu episode of 1918. It was, in terms of a pandemic, just from the epidemiological perspective, if you look at the parameter that is that is used by epidemiologists, the parameter called R0, which captures the probability of how many people will an infected person infect. So the Spanish flu had an R0 of about 2.2 to 2.3. This is estimation that has been done by the epidemiologist Larry Brilliant, who was involved with the movie Contagion. And the estimate for COVID is 2.4. So very, very similar. Just to contrast, for the common flu that comes every year, it's about 1.2, 1.3. At the other end of the spectrum, smallpox and Ebola, etc., have more than 3.5. The reason I'm bringing this up is because as a pandemic, the Spanish flu was far more devastating than the COVID. Just to give you some numbers, 1/3 of the entire population, world population, was infected by the Spanish flu. The mortality rate was 10%. In contrast, even though the numbers are large, less than 1% of the population is infected at this point in time, and the mortality rate is about 3.4%, which is 1/3 of that for the Spanish flu. Despite that, there was a bounce back in the economy. The year when the mortality rate was very high, and that happened in the second wave of the Spanish flu, the GDP, basically the economy did shrink. I'm saying this for the United States, but the next year it actually it bounced back. So that's what sort of leads a lot of us to talk about this V-shaped kind of pattern, which output declines and then and comes back, but the sort of overall slope is maintained. This year, I think we can expect Q1 to be quite, a decline. Q2, I think, would be a little better than Q1, but overall, I would say at this point in time, between 1 to 2% is what one can think about. But as I said, it's really important for all of us to continually recalibrate, the numbers, because it depends on the extent of the lockdown that we have, and within that as well, like for instance we're having after the 3rd of May, some of the areas, about 350 odd districts are in the green zone and they're being opened up. I understand their contribution overall to overall GDP is lower than that in the red zones, but the gradual lifting up of some of these restrictions will also impact how much economic activity we get, and thereby the impact on GDP growth.
Okay, fair enough. My question is, what's it going to take to encourage people, though, to continue spending? Because several sectors, whether you're looking at aviation, hospitality, etc., have been very badly hit. Do you think that's going to be enough to ensure that people are actually going out there and spending? Is that going to take much more on in your opinion?
See, this is where I feel that recovery from corona is important. I think in the end, the confidence among people is going to come from the realization that corona is now behind us. Therefore, I think in the interim, and this really boils down to either finding a cure for COVID-19 or finding a vaccine against coronavirus. One of those two. I think once that happens, I have no doubt that the spending will be restored. I mean, human beings by nature, want to return to normalcy. We have seen that the threat is still with us, and yet people who have been in the lockdown for, in India, about 35 to 40 days, in the United States, I have personally been even longer. We want to get out. We want to start our normal lives. So as long as we can sort of bring this virus under control, the normalcy on expenditure side will be restored. Now, what it does require, of course, in the interim, is to ensure that people have access to food, to basic minimum expenditures that they need to incur. Workers that have lost their wages at least have some sort of assurance, right? So if for example, workers don't even have an assurance of wages being paid once the economy comes back to life, then their spending will naturally be negatively impacted, in which case the government will have to do something. Now, government could also do a bit more via infrastructure spending. I mean, I would rather that the government really spend its money in a way that it also simultaneously creates productive jobs. And for that, infrastructure is probably absolutely the best area in which the government can begin to activate its own activities on a larger scale. Maybe, build roads faster, build railways faster, build bridges faster. That will provide both jobs and automatically also give the purchasing power in the hands of the people. Because I think, without creating a corresponding asset, if you are trying to make massive transfers, at the end of the day, you will not be able to sustain that. That's much harder to sustain.
Let's take a quick break on that note. Much more on the other side. Just stay tuned. Back in just a moment. Welcome back with us here on Leaders of Tomorrow. Tonight, bringing you a very special conversation with the Chief Economic Advisor of the country and Dr. Arvind Panagariya. I also want to talk about the fact that initial reports are suggesting that several global majors, several MNCs could possibly be looking at moving their manufacturing plants, factories, etc., outside of China to other countries. India, of course, being in a position to really benefit from that move. For entrepreneurs then, who are watching this interview, do you think that this is going to be a big opportunity? How should they perhaps start preparing for any opportunities that are going to come in?
Yes, I think, for the entrepreneurs, it is going to be a big opportunity. With the caveat that, ultimately the government has to do its part to make it happen. The process of the multinationals moving out of China has been underway for a while. COVID is a more recent phenomenon, but the wages in China had been rising. Plus, the US-China trade war also gave further impetus to this movement out of China. Now, COVID has come in as a huge kind of a kick to that process. Now it's up to us, meaning really the government, to do the right things to ensure that these companies actually come to India rather than choosing Bangladesh, Vietnam, or even Indonesia. At least in the past, much of the evidence that one sees is that these companies, these multinationals, have gone to Vietnam and Bangladesh. Now, where I fear we might again miss the bus is that we continue to think that giving small incentives here and there will get these companies to start coming to India. I think at the end of the day, we should ask the question, why is it that previously they were not coming to us? It was not the lack of incentives. It's a different economic environment. Bangladesh and Vietnam probably provide low wages with a better economic environment. And that is what we are missing, that, the labor laws are so tough in India, land access and land prices are so high in India. Those are the things. Business processes perhaps also may be more complicated in India. So those are the areas in which we need to do our work. And this is why I have pitched very strongly for at least, to start the process, creating some sort of autonomous economic zones along the lines of Shenzhen. Now, Shenzhen in China, which is, 30 years ago, these were pure villages. These were fishing villages, and all the living people did there was through fishing. Today, Shenzhen is an incredibly powerful, tech house. It is a house for entrepreneurs. Per capita incomes exceeding $25,000 per year. How did they do it? And really, it's very important part of that reason was that Shenzhen has a lot of autonomy in policy. They can make their labor laws, they can make their laws with respect to land conversion laws, and so forth. So this is the kind of zones that we need to create also, at least a few of them, as a matter of experiment. Start maybe with 3 of them. It's not very costly to do it, given all the other resources that we invest in other things. This is going to be a very productive investment, worth a try. I think we have nothing to lose if we try to do that.
Sure. I was just talking to Mr. Panagariya about some initial reports which are suggesting that global majors have perhaps over the past few years and definitely now been looking at moving manufacturing bases out of China to other countries. India, of course, could stand to benefit. If you had one piece of advice for an entrepreneur, for a small business watching this interview about how best to tap that opportunity, Mr. Panagariya was, talking about specific zones, etc., which need to be created rapidly. Ease of doing business perhaps also needs to be eased up a little more in the country. 1 or 2 things that you think entrepreneurs should do, 1 or 2 things that you think that the government should definitely do, if this is quickly going to become an opportunity for India Inc.
So, Sunanda, I would like to bring attention, to our entrepreneurs, to the chapter that we wrote in this year's economic survey, the 5th chapter, with the message primarily about assembling in India for the world. And we focused on 6 sectors which are called network products. Electronics, for instance, is one of those sectors where India is already doing well, but there are other sectors where the global value chains are very, very intensive, and we also had done estimation for the amount of value added and the employment that can be created in these sectors. These are sectors that tend to be very labor intensive, and just to give an example, in terms of the take for instance the iPhone. On a per unit basis, the value added that China does is very small. But almost every iPhone that was sold all over the world was assembled in China. So you take small amount of value added, but multiply it the huge scale, then you get a lot of value added, and that's the basic proposition. So I would suggest that entrepreneurs really look at these these 6 sectors with a lot of focus. And in fact, this was primarily motivated by, if you look at the pattern of the exports, for India and China, since about 2000 or so, if you look at the proportion of world exports, China just took off. And if you split that up into the impact of diversification across various product categories and specialization into specific product categories, the entire or a large part of the difference between India and China comes because of the absence of specialization for China, for India, and the presence of that for China. And so what we basically need to do is, rather than trying to spread our energies across various different sectors, we should be focusing on these 6 sectors and really dig deep and specialize them, because this is where our comparative advantage is also there. Also, for instance, a lot of people talk about what about value added. If you look at the history for the automobile sector in India as well, and we covered this in the survey, it started out first with assembling, Maruti Suzuki, for instance, Maruti Suzuki. And then, downstream, a lot of the other, ancillary industries, etc., evolved as well. So for the entrepreneurs, I would say this is where the main opportunity is. The government, of course, the steps that we need to be taking is, one, on the labor law side. I think this is something that Dr. Panagariya has also talked about. We covered this in the last year's economic survey in July, because economies of scale are important for for such factories, and any restrictions that come from labor laws can be sort of quite important, and those can be important constraints in not generating those economies of scale. Other aspects, I think, making land use easier. The other important part would be reducing duties on, on the components, those that are basically required for assembling, so that our exporters can compete in the global markets. One of the things that we economists talk about is basically competition, where you are the price taker. In an export market, most domestic firms will be price takers, and therefore if they can actually save, let's say, 8 to 10% on their input costs, that can mean significantly, because they can pass that on to the consumer and thereby become far more competitive. So these are some of the steps that should be taken from the government side. But I think collectively, whether it's the government or the or entrepreneurs, we need to be focusing on a few sectors and really dig our resources, dig our heels into those sectors, and really focus our energies in that.
Sure. It's been an absolutely fascinating conversation, gentlemen, having both of you here speaking with entrepreneurs directly on the leaders of tomorrow. Thank you both so much for taking the time to speak to our viewers. Mr. Subramanian, Dr. Panagariya, thank you so much for your time. That's part 1 of this very special conversation with the Chief Economic Advisor as well as Dr. Arvind Panagariya. Part 2 has us talking to them in depth about what it means for small businesses who are perhaps staring at the threat of bankruptcy, what more banks should do, what more the government should do, all of that and much more in this very freewheeling conversation coming up on part 2. We're completely out of time on part 1, however. Thanks for watching. Have a good night.
We do need to save the businesses. This ought to be done through the availability of liquidity. At the end of the day, I think the government can't bear, in my opinion, at least, the cost of wages and so forth. That's something that the firms have to work out with the workers.